Welcome back, and in this video, I'll discuss Tobias Carlisle's The Acquirer's Multiple, how to use it, and how we can apply it to Google Sheets and FMP to run our own evaluation and analysis. Tobias Carlisle is the founder of The Acquirer's Multiple, best known as the author for the book The Acquirer's Multiple, How Billionaire Contrarians of Deep Value Beat the Market. Carlisle also worked in M&A as a lawyer, and he oversaw a lot of the transactions of venture capital and private equity in the acquisition process. What he talks about is mean reversion, where there will be a reversion back to the mean from its relative lows. So what The Acquirer's Multiple would do is buy something very low and hold, and then hope for it to go back to relative highs or at least achieve a mean. And so he does talk about a lot of good research in his book. He essentially builds off of Joel Greenblatt's magic formula, which was return on capital and earnings yield, and backtests it from 1973 to 2017. And through that, demonstrates how the Acquirer's Multiple achieves better returns than the magic formula. And then, of course, both of these achieving better returns than the S&P. Okay, back to Google Sheets. We can open a new sheet, and we'll start in A1 with our variable cell. And we'll start with NVIDIA. 14, bold, center. It'll be variable, so we'll make it blue. Merge these together. And this is Tobias Carlisle, The Acquirer's Multiple. Okay, center that. And we'll index our quote. Index, FMP quote, point back to A1, 1, and 2, 2. Okay, we'll leave 3 through 5 blank, and we'll bring our formula in. Okay, so with the Acquirer's Multiple, EV over operating earnings, and this is going to be where EV, or enterprise value, equals market cap minus cash and cash equivalents plus total debt. I know this because if you go to FMP's formula under extras, you can find the formula for enterprise value. Okay, back here. So now that we have our formula, we're going to need enterprise value, operating earnings. Looking for the Acquirer's Multiple, push that out a bit. Okay, for this, we need our income statement. So we'll go equals, transpose, FMP, income statement, call back to A1. We're going to want 4 quarters of data. Once again, we'll go back up here. We'll look for our TTM, or trailing 12 months, and we'll let Google do the rest. And again, the reason we want trailing 12 months is because we get the most updated quarterly reports this way. So this last report is from May 1st, and it was filed May 27th of 2022. If we just use annual reports, we're going to have outdated information, and we want to make the most up-to-date decision based on these numbers if we want to buy, sell, or hold. Okay, now that we have our income statement, we can start to do our calculations. So for enterprise value, we can let FMP give us that information. So here we're going to index FMP key metrics, and we'll go TTM back to A1 for 1 year, close parentheses, and we're indexing to 11. Second row, 11th column. Okay, there's our enterprise value. And for our operating earnings, we can pull this from the operating income in the income statement. F35, make that money. Okay, so for our Acquirer's Multiple, it's just EV over operating earnings. And we'll shrink these down, center, make it 14, and we'll put a box around it. Okay, and next, collapse these cells, and we'll make this our signal. If B9 is less than 5, then buy. If not, sell. Center, make it 14, and we can go conditional formatting. Text is exactly buy, show green, sell, show red. The reason I used 5 here, and you can use whatever you like, most of these companies on the screener that are worth probably buying, if you're going to apply this formula, are at or around 5. mRNA, you have a 3.6, Old Faithful, Altria, 6.1, etc. Additionally, we can apply our own screen to this as well using FinViz. I've already got the screen set up, and what I would use is USA, return on assets over 20%, a quick and current ratio over 2, net profit margin over 20, gross margin over 20, and positive operating margin. And that'll get you pretty close to where you need to be to get good buys out of this formula. So we can put that to use. We'll just grab these tickers, paste them back here. Okay, so NVIDIA, a 40.5, that's pretty high. Let's try ADES, 12.9. Veer 2.0, interesting. Smith & Wesson 2.1, good. Encore Wire 1.9, very good. And so the number you're looking for is the closest number to 1, because you're basically buying the company's operating earnings. The higher you go, the more of a premium you're paying. So the closest to 1 you can get is what you're looking for. And lastly, we will show grid lines, turn them off, and looks good. All right, that's all I got. I appreciate it. Let me know if you found this useful and if you would like to see anything else. All right, take care. Thank you. Bye.